So we're back. Welcome to the CrashLabs, and we're all back. Matt's phoning in remotely from Vancouver, beautiful Vancouver, the new home of Matt Wilson, Josh Duggan, CJ Kim, and myself. It's been a long hiatus, sort of.
Not that long.
Like a summer. We were just getting going, and
yeah.
And then August hit.
We got some pretty sweet stuff lined up, though.
A couple of special Beaver Creek episodes.
Yeah, we got some nice ones. We got Beaver Creeks. Siege, you held down the fort with a couple of interviews throughout the process, which did a good job of those.
Thanks.
And we got Warren Irwin in this week, which is cool. Good chat with him.
How was Beaver Creek?
Weird, man. It sucked. No, it sucked. Let's just call it what it was. It fucking sucked.
Sentiment, like, super low. Everyone's so sad there.
Yeah.
Everyone was feeling, there's a lot of self-deprecation. I'd say, same amount of companies, even maybe more companies.
No, it was more.
Than usual.
It was an all-time high turnout.
Right. So, yeah, exactly. So more people from each company came for sure. And it was sold out right away because I know a few companies that couldn't get in. But in terms of like investors, it seemed like maybe there was half there of last year.
There was a lot of people that were shit-faced really early in the night. I did very little socializing at night. I think all of us did. It was like we were busy during the day, but it was one of those weird ones where and it wasn't like the getting drunk because they were having fun. It was more like getting drunk, like almost like a depression.
Yeah,
kind of drunk.
Well, it's weird because Denver had no one, right? Like there was all those pictures online being shared where you had
like nobody,
no one in the hallways, like zero. I remember Ari Sussman put that like a post that got sent around by everyone. It's like, This is how you know there's a bottom because no one's here.
And everyone there was very little capital floating around the show. It was all issuers. They let in a lot of like riffraff too, sort of. I don't know, man.
I think they just show up because a lot of people, especially the companies that couldn't get in, they just book a ticket there and they hang out because it's like Love Island for issuers and investors because they're stuck there. You can't get away from them. So exactly. I think a lot of people there go to talk to as many people as they can, but so you get some of that. There's still some.
Where it was valuable for us? Like for us, it was valuable because we got to trade in secrets. So we got to go over there and hear whispers of this and this person's doing that and this new deal and da 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 da, and you can kind of get a sense of where the hype's at. And then there was a few invites to play and co-play da 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 in some new opportunities that some well-to-do cats are putting together.
This one issuer, Matt, was like, guess who we did a JV with? I'm like, who? Bin Laden's family office. I was like, you can't do that.
Wow.
I'm like, and then he's like one of those guys that touted like he's so ESG, one of those guys, and it's like, that's not ESG.
Socially responsible.
We'll let people guess who did one of those JVs.
There's a few wild ones, man.
Yeah.
But there were some good ones. We heard some really good ones. Like, so we got some really good takeaway leads. It just sucks. Like when you're the only capital floating around, it's quite evident.
Yeah. It seems, I've had a couple conversations with other fund managers and, you've got, the same sentiment from Beaver Creek is kind of echoing everywhere where people are just like, well, if the market's not moving, what do we do? And it's like, I don't know, like literally I just had this conversation with someone yesterday. He's like, I don't know, I'm throwing it into a money market. I'm just going to chill for a bit. Let good deals come to me, be super selective. Cause it's just like, it's such a hard market right now. Cause you can be right and things still don't move. Right. So what do you do if you already have deals you like, you already own things that you like, you spent the last year building up, 2 years, whatever. So it's like, why would you buy more things? You're like, I already own good things. Just chill and conserve cash. And that seems to be a pretty across the board thought right now.
Yeah, it's also a good time, Matt. I was thinking about this because that was us talking about that yesterday.
No. I actually had a chat with this other guy right before. That was where it spurred our conversation. It was right before that.
This is a secret. I'm like, no. I'm like, yeah, it's probably gonna be
the same guy
to sit on some gunpowder right now and keep it dry for better times. And like we've got plenty of great deals, and there's no need to get too crazy and just buy things for the sake of buying them. Like if the right things come along, great. I mean, right now we've got a pretty good exposure across the board. I was just thinking on that though. What's another good thing to do in times like this? And these are the times when we build things. This is a good time to like. I need a new job, like I need a hole in the head, like another thing to do. But it's a good time to like actually craft a new deal. So like our pet project, remember that top secret project that never.
We always have some good things in the cooker.
Yeah. And then the other top secret project that we threw around earlier. So we've got some inception ideas. This actually might not be a bad time to.
It almost feels like the new inception ideas are the ones that are getting capital too, because everyone is either deployed in the deals that are already existing, the better ones out there, or like the ones that people are getting excited for are the newer ones. What do you think? Because like
that Bolivia deal is getting shit tons of hype.
The San Cristobal one.
Yeah. And so is Kelly's deal is getting hyped too.
Yeah, which is great because Alora's had a tough time. Big tonnage, big resource, low grade, right? So it's great that that's getting a lot of hype still because tough country to be in. So you got to have something pretty good to be there, right?
Yeah, people were talking about that when they were talking about Kelly's deal in the elevator.
Nice,
which was cool.
Well, we're the lead on that. Yeah, for sure. It's all closed. We're done. We own. What do we own? What do we own of that? 12, 13%, something like that. 12, something big. It's great. That deal is just so fun, right? Like Kelly and just spent, I don't know, a year dealing with the people at Waterton, right? And there's this great thing about it. We went down. We just did a pod that's going to be out at some point. We did it on site. Christina McCarthy, Kelly and I, and Christina and Kelly are on the board. Amazing. Tony McCooch is chairman. Greg Gibson's on the board. Rich Patricio's on the board. Big funds came in a terrible gold market. And this thing is like 30 million of replacement infrastructure in Nevada, currently pouring gold. 1.7 million ounces, I think. 300,000 oxide, like this really cool mine plan and just exploration targets for days beside Hecla's 2 million ounce mine. Like it's a cool project. And that even only got $8 million, right? They closed on 8. I think he's got 12 now in the last year, but those are the stories that like look at like West Red Lake Gold too, right? So like I kind of put them together. You've got that's just kind of a bigger scale. You got these huge infrastructure pieces. So we played the West Red Lake deal. That was at 35 cents. That's trading great. It's up.
They put out that monster hole during Beaver Creek.
Monster hole, right? And like you watch their materials. Like they're the guys think that they have $1 billion company there. Like that's what they're pitching. They're like we're building another gold corp with all of this work that's been done already. I think they have a global resource of 3 or 4 million ounces right now, right? And that Rowan mine looks pretty cool. So but those are the projects right now because to your point, like it's either new or it's like, can I have a back end value? Can I sit on some value? Like those ones are trading well and getting a little bit of money, whereas the more speculative, like you need a discovery. That's the biggest thing, right? We've talked a couple times. I was just on the call this morning for about an hour with NOAL, like the NOAL Lithium guys. Those guys have done every single thing that they said they were going to do over the last year, but better, right? These guys, they had this theory of this edge of the brine. It's going to be a big resource, and they have killed it. And the stock is the same place that it was when we put money in the first time. At least it's not down, I guess, but it's a tough market right now, right? And so you say, well, what? That's a great story. I think that's a takeout. And
well, it's just, what's nice about that. And I'm not a huge lithium fan. We can, I've said it a million times on this pod, and I had Warren on earlier this week, like I said earlier, yesterday, and we were talking, and he hated like lithium. He's like, stay the hell out of lithiums. But like even talking with Warren, a lot of this stuff, it's like he ended up landing on, well, you got to buy good assets, and it's like kind of always that, anyway. Yeah. The reality of that I like about that NOAL deal is that it's something we can touch and feel in a jurisdiction, a type of lithium, brine that is, concurrent or that is, synonymous with all the other types in that area. It's in a locale that produces a lot of lithium. I mean, there's nothing weird or strange about that really. So I like that one. That's something you can touch and feel, but there's so much grift in the lithium space right now, man. There's so many weird things and crappy things, like so many lithium companies that will not exist in like a year if they make it that way.
For sure. Like the Ontario stuff is just, Ontario and Quebec stuff is intense right now. Like I'm still seeing a bunch of stuff. It's a lot, right? It's like a lot of companies. There's only so much capital to go in there. And I know, speaking of Warren, he touts that a lot, right? He's like, look at the number of companies. How can these work? There's only so many mines that can be built and so much capital to fund it. So,
Yeah.
you know,
well, it's kind of like the uranium thing. Like we saw uranium pop hard. We love NexGen. We know like what the real assets are, right? Like there's not that many of them that are awesome kind of on deck assets. And yeah, I mean, fast forward maybe 12 to 18 months, there's going to be hundreds maybe of uranium if the momentum stays with it. You might end up in a market where you get hundreds of uranium names, and they're not.
We've had a good trade. We had a good small trade in uranium. We kind of missed it by about 2 days, but shout out to Mega Uranium as a position. It's not a huge position, but it's a position. Those guys own $165 million of NexGen.
Yeah.
Yeah.
And then about 40 or 50 million of other stuff. And Rich is doing a great job of putting things together. And it's still a 60-70% discount to just NexGen, let alone all the other uranium stuff they have in the portfolio. So
it's a wonderful ARB.
Yeah.
That's a good one.
Yeah. And speaking of ARBs, your Mawson trade has done incredibly well, and Southern Cross put out that awesome hole as well.
That was a bananas hole. 400 meters of 5.6 grams equivalent. 5.1 of it is gold.
That's what they needed, though. You know, that was kind of the big question with Southern Cross wasn't whether they could drill 100 meters of good numbers, right? I mean, good numbers, not like crazy numbers, good numbers. They had that. They had demonstrated big hits, 20 meters, 30 meters of good, and some great. But they didn't have like exceptional yet. There was still that whole like, is there kilo exceptional blowout gold? Is there crazy stuff here? And they've put it up in spades, like in spades.
What was the jewelry box they had? It was like a 0.4 meters of like 2,600 gram gold or something like that. That was the
like there's now good, solid, high grade epizonal, preserved epizonal system that is underlying or interstitially dispersed throughout what they've been drilling from much shallower depths. And where's that line? I mean, for Fosterville, it's what, 400 or 500 meters deep.
Is that what it is? I thought it was deeper than that.
Oh, it does go deeper. They go down to like 2K, but it starts at like 400 or 500 meters. Like they chased it back up. So I think the shallowest occurrences of that caliber are like 400 or 500 meters deep. But then like at a kilometer plus, that's where it's, you know, that's the bulk of the jam, right? Newfound, it's at surface, but you know, this thing, Southern Cross, I mean, it's there. That's the bottom line is it's there. So that's great.
Yeah, that's a great project. That's still a big position for us, Mawson. And we actually bought Southern Cross directly too, because the ARB turned around. But speaking of uranium, you know, it's funny because Mawson started as a uranium company.
Yeah.
Their gold asset in Finland also is an old Areva asset. But sounds like they're going to do a bunch of stuff in there. And excuse me. But they're going to turn a little bit of a uranium spin out, and it sounds like gold and a bunch of things going on in Mawson. So both those things are nice positions, and Mike's doing a great job pushing it forward. And that's a fun one. It's always nice when one of your companies hits something like that. That's for sure. But again, Southern Cross, it's a great example. Southern Cross is 80 cents in Australia. After the exchange rate, it's like 65 or something. That's $100 million market cap.
That's crazy.
For 400 meters of 5.6 grams across like 5 kilometers. Like it's not very high.
Yeah, there seems to be a lot of distance on that to go.
Yeah, that's surprising considering that Australia, the ASX, can be considered a bull market right now. And, you know, Matt, we looked at the chart for it, and compared to the TSX Venture, these guys have been in a pretty good market for a while now. And, you know, it could be a variety of reasons, but you know, this is why we're hearing a lot of issuers that are based in Canada looking to co-list in Australia, just because there's so much more capital over there, and they have the risk appetite for it, and you know, they don't mind investing in
the problem
high
is
risk stocks.
The problem is though, there's such a big difference between the DNA of a promotion in Australia and the DNA of a promotion in Canada. They don't see the market the same way. So the dream scenario of existing both on the Canadian exchange and the Aussie exchange as an Explorco will take you down a very shitty path, because in Australia, let's say Australia doesn't have the same spec value, so they don't get that same pump, that same spec. They don't really care about that. They don't care about the dream about how big something is. It's like, it could be a 1 million ounce deposit that you're drilling out, let's say, or 2 million ounce deposit. You've got this, you're like the big system, it's huge, whatever. They're not going to give you money. They're not going to pay for that 1 million or 2 million ounce spec. They'd rather see you drill $10 million worth of drilling, let's say, prove up a 40 or a 50 million ounce, a 40 or 50,000 ounce pod, right? And then they want to see that thing permitted, and they want to see that thing de-risked. And so they're very like, let's publish a resource right away and then incrementally grow that resource and go back to the well for more cash and like grow it in front of everybody. Whereas like in North American markets, we don't do that. Because if you were to do that, you would kill the spec. Right. So like that's
why I guess off the bat they just break their cap structure, because they want to raise enough money to get to that resource right away. Like a lot of these even new issuers are coming out of the gates. They don't care. They're raising $10 million and all of a sudden they have 1 billion shares out. And is that why? Or
I think that's just all. I've always said that the share thing, my opinion on that is that the share thing is just a relative thing. Like if you're in Vancouver, you think that a company needs to have 30 or 40 million shares out. And if you're in Toronto, you're like, okay with 100 million shares out. And if you're in Australia, it's 1 billion shares out. But if you multiply the shares times the price, it's still the same market cap either way.
Yeah, we've gone through.
Well, yeah, it seems like they don't
times,
exactly. Right? They don't seem to define market cap. It's just, the stock's at 5 cents, and we hope to get it to 10, irrelevant of how many outstanding shares.
Oh yeah. Oh no. I've talked to guys. I have no clue, dude.
Yeah, CJ's great joke.
No, that would who said that, like, when you're asking him what the pre-market value was, and he's like 5 cents.
I was like, what's it worth though? What's your value of your company? Is 5 cents. And then I'm going to go public at 10 or 15. I was like, well, what's the value of it? He goes, 5 cents. I'm like, how many fucking shares do you have outstanding? And like the value of your company, pre-market value of your company. No clue. And this is a guy that had multiple deals.
It is interesting though, because like I've been looking a little bit at the AIM in London. I've had a couple of company chats over there, and the AIM in Australia, they prefer liquidity, right? So it's an interesting thing to compare to Canada right now, where we have this promo in a way, right? Mm-hmm. Where you have the standard way to do things. You have tight share structure. You can buy the stock goes up. You can raise more money. And in Australia and London, for the most part, they're just like, well, forget that. Like, why? We need liquidity so people can trade, because that's what this is about. And so we might not be able to get like 100 bagger the same way, but we can trade. And so people can come in and out, and institutions play much lower levels. But then it's interesting in Australia, because a lot of them made a ton of money in Canada, right? Like the Patriot trade was mostly Australian. A lot of the lithium guys were in Canada, and it was Aussie traded. But then even in the copper stuff, like that Aston Bay American West project up in Northern Nunavut, right? The big copper
thing.
Which
collapsed today.
Did it?
Yeah, they put out assays.
What were they?
I think it was like 40 meters of 2%.
Oh, I thought they had that out already.
We don't have. We got James in the hot seat today. No, too much. I'll pull it up. Hang on a second here. Let me see.
Oh yeah, down.
Did they close
it? What's the ticker? Sorry,
BAY, BAY. I think it ran up on visual assays, didn't it?
They drilled 76 meters of 2% copper.
Oh,
you got it.
I mean, yeah, I have it up here. I could share. I mean, that's a pretty good hole. Is that right?
That's outstanding. Why would that go down?
76.
20 meters of 6, 48 meters of 3, 76 of 2.
Which includes 20 meters of 6.2%, which includes a half meter of 50%. That's cool.
Like, even if you think that's smearing, I'll just give me that 20 meters of 6% and forget the rest. Like, good.
The hardest part about that project, of course, is that it's just the infrastructure is challenged, right? I mean, it's in Northern Nunavut. You have like work seasons that are 6 weeks long, that sort of thing. But the geology there is cool. Yeah. It's like 100-kilometer long strike. This set hosted system. It's.
This was an interesting.
That one hole was their entire budget.
Yeah, that's the hard thing. I think that there's like a story where like one season up there, the whole season was moving gas. Like the whole exploration season was just moving fuel.
What is the window that they're working with? 2 to 3 weeks up there?
It depends, I think, on the year, right? I think like usually I don't know perfectly, probably 6 weeks, I think.
Usually it's about 6 weeks.
But this is another
it's like Polaris, right? So like there's history of mining up there. It's right across the bay.
It ran up.
Across the
this
bay.
Ran up on Australian promotion though, right? Because they don't own.
Yeah, the American West guys.
How much do they own of this project? 20.
Well, American West is earning in for 80%. Yeah. So Aston Bay owns 20%, right? So they had a 60 million market cap on 20%. But it's interesting talking about the Aussies, right? Like the Australians wanted exploration and big copper, and there's not a lot of big copper to be found anywhere. And they ended up coming here, and people made really good money on the American West trade. But that project was $240 million, right, on this discovery. So in general, like it's gonna.
What's the market cap on this thing now?
Well, I guess Aston Bay was 30, so it's probably 20 million on Aston Bay right now. So the project they're saying is worth still a pretty good chunk, right? It's like $100 million project. Like it's not, I think that it just sucks because their timing of the raise. Like you like to see people succeed in these things, of course, right? So B's project though, they got a really good technical team advising there.
I like how they use the pop to raise a bunch of money, and they're gonna put it into their secondary asset, I guess.
The gold project. Yeah. the other 46 weeks of the year.
They're not putting money into this project.
No, because America West is earning in. They're spending 10 million to get the 80%.
So they pop.
Yeah.
That's smart.
So like BHP's been here. Like there's like history. Like this was a tech asset. Tech drilled 140 meters of 2%, 2.5% or something back in the 90s. Like it's like these big gravity anomalies that occur over and over and over again. Because there's a nice contrast between the rocks. So like usually that doesn't really work in these kind of systems, but there's a big contrast in the rocks. So it's
what kind of system is it? I didn't even read it.
It's a set hosted system.
Oh, it is a set system. Oh, okay.
Mm-hmm. Yeah.
Okay.
Yeah. So it's just the challenge is like you got to follow that up. Like you drill a big hole and then you want to follow it up, but you got to wait a while.
I've been following
I'd rather be in Labrador. Or sorry, I just stepped on you.
No, I was gonna use that as a segue as well, but I was just saying that, like the whole or the press release we just went through didn't seem particularly bad. So I wonder what warranted the huge drop. But how is everything going?
Buy on mystery, sell on history.
Yep. How's Adeline coming along?
Man, Adeline is cool. I mean, we're in the middle of the drill program right now. It sucks. Like our portfolio, we're chatting about portfolio today. I think like the portfolio names that are killing us right now, the only things that are really been down are like our names. It's like Newfound went down from the last 3 months. Nevada King, which is a relationship, Sterling, Kirkland Lake, like names we really like. They're the ones because they have a little bit more liquidity, I guess, and they're just down. I mean, we're half the price of the issue, but Adeline is a pretty cool project. It is very big. Like geologists like to say that copper oozes out of the ground. That's literally what our response is so far in the field program. So we got assays in a truck. We got core in the truck right now. It should be in ALS in Montreal pretty soon. And so we're 2 to 3 week turnaround time. We're going to rush them a little bit and then try and have like 3 holes. We're prepping for a winter program to start at the end of February. I think we have like 5 or 6 different kinds of copper mineralization on the project right now, like everything from native copper to all the colorful forms of oxidized copper to chalcocite and boronite. So it's fun. It's like we'll see what the assays turn around with. Drilling up there for a first program, short program, has definitely been a challenge. Like drill rig breaks and then it takes 3 days to go get a part, some engine part that no one knows where it is, and got to go get it again. But we'll get better at it as it goes. But it's a big copper system. It's a similar kind of geology to Aston Bay, a little different, but same kind of like host rock. A little bit more. Actually, our guys are looking at the Athabasca Basin as a bit of a comparison, but with copper, it's pretty interesting to see the comparisons between the two. But yeah, it's that the drill will tell us. I think that we're dividing up the program so we can actually see what the assays are, but it's pretty fun so far.
How much cash do you still have left?
I think that we're gonna right now. I just under 6, I think, was going into the program. We'll probably have 4.5, somewhere between 4.5 and 5 at the end of this program, at the end of assays.
With news on preliminary drilling. Got it.
Yeah, so I'm going right into the field. We're going right into the field season in the winter. We're going to do another 2,000 meter program. I think that the one thing about this system, it's so big and it's so early that like you can see cool rocks, but then it's like, is it good? Like, is that a good rock? I don't know. Like, are the assays going to be good? It's chalcocite is like invisible when you're dealing with dark rocks. Like, I don't know if it's there or not. So we're going to see where it all ends up. I think we're in a good spot with that Ellis target. We're hoping to hop across the basin and drill something 20 kilometers away because it's pretty fun over there. So it's the first time we've been on it, and so we're going to break it up just a little bit. But it's I'm not unhappy with the project, but it was really interesting sort of thing that we're on. That wasn't that exciting way to promote it, but we don't have assays yet to talk about it.
No, well, it's hard for you to talk.
What can you say
other than
stuff? It's big copper. I think, it's interesting. It ties in. I go through the message board once in a while, right? Like it's good to see the hatred. It keeps you humble. But yeah, there's a comment about oil and how oil is really good. And I like the oil. CJ, I know you spend a lot of time looking at oil, and the oil is a totally different world, right? Than mining, because it's near term profit. The well costs are gargantuanly more, but there's just way more capital in the industry. But the oil trade, it was brought up, it was like, look at oil. And I thought about it a little bit. And I was like, well, the oil trade actually is like 7 years now, right? Because if you remember like the shale oil boom that happened between 2010 out of the recession and like into 2015, you had this like giant resource expansion boom, right? The Permian, the Bakken, all this stuff. And so there was all this excess supply, really. And then oil died. And it took some serious patience. It took like a consolidation in the industry, the elimination of a lot of juniors, some bankruptcies, and the COVID. Like, remember when oil, you had to pay someone $37 to take a barrel of oil during COVID? So then there was a war, right, with one of the largest oil producers in the world. And then oil spiked, right? So it's like you needed all these fundamentals to be there. It's not like this was a turnaround trade. Like, it's like all of a sudden, right? Like, so I do like metals, right? Because I think that it's like invest where things are going. You see that there is still interest. The uranium trade is big right now. People are ripping into it, right? Everyone's talking about it. But, the city manager came out, like Citibank came out and is like, copper is out of control short 2025, right? Like out of control short supply. You have the BHP chairman saying that like we're hilariously short of copper. And like, are we actually hilariously short? Probably not, because there's a lot of crap copper projects that can go online. But like, be there now. It's like, it's a pretty cool place to be in for us. I think that because we're, all these fundamentals, it's global inflation. Gold is great. We have really good gold projects. And so you're kind of sitting here with capital, with good positions, thinking about that oil, that cyclical nature, the oil trade, thinking about the uranium trade, right? Like these things do come back up. And, it was an interesting thing.
Do you think that on the gold side, like, I think across the board, it's hard to argue that right now where it's a bear market for all these things, really, other than like lithium. Lithium's frothy.
Right. And uranium.
Uranium isn't in a full-fledged market yet.
No.
It's peaked its head a couple of times, but it's not running the way.
But again, that was $20. Uranium was $25 spot like 3 years ago, right? Yeah. NexGen was 79 cents during COVID.
Yeah, but what do you think? What do you think? What do you think? What do you think uranium's kind of frothy top looks like, and where do you think it settles back to what it should be? Is it like, does it FOMO up to like $150 a pound and then pull back, or like what does that look like for uranium? How do you think that's going to play out?
I think when we saw that, like after the crash from when it hit the 150, 170 on mark, and you saw kind of a renaissance happening before Fukushima derailed everything again.
70 was kind of like where it leveled, right?
No, but this is different because we've been mired in such a bear that it's like copper, but even worse, because there is actually no supply, and it's one of those commodities where like you can quantify how much a lot of these reactors will need, and people can speculate. No one really knows what's out there in the spot market, but there's enough to know that once these reactors and buyers start coming out and having to fulfill what they need, the obligation in the spot markets, and they buy up everything, that's when things really start shooting upwards. And
There's a couple new big funds.
Yeah, and you have like actual funds buying up physical as well, which only exaggerates that situation. So it's not like copper. You're never going to have like maybe there is someone out there trying to corner like the physical. There's just too much out there. You can't go out there.
I still don't see how to play it though.
Uranium?
Yeah.
Mega.
No, I mean, okay, aside from Mega, fair enough. Aside from Mega, right? Like through its portfolio and its exposures, let's say. Aside from like buying a Mega, if somebody walked in tomorrow with like a uranium discovery in the Athabasca, let's say outside of the main show, and they're like, okay, I'm not in, we're outside of the main crater and we're looking for along some of these big cracks because that's kind of all that's left.
Mm-hmm.
And we're going to be looking for sort of that type of stuff, like fishing stuff or like NexGen stuff, but outside. That's kind of where we're at now in the Athabasca Basin. And then if you're not in the Athabasca Basin, where the hell are you? You know what I mean? Like if you're in Labrador looking for uranium or whatever, it's like, sorry to say, it's not happening. It's not going to happen.
Not at these.
And I haven't seen anything out there, even remotely close to interesting or and when something like NexGen exists and it's still not a mine.
It's like the whole market.
It's literally like having like, I don't know how many like millions of ounces, like a 10 million ounce gold deposit with like an ounce per ton.
But that
great.
But that kind of tells you that uranium has to run to make these kind of projects sexy again, right? So if uranium spikes up to 170 again, you are going to be looking at projects in Labrador saying, wow, that's a good project. Outside of Athabasca, it's its own beast, right? But like Athabasca.
But I mean, like, look at NexGen. NexGen, you got Areva, you got Cameco, you've got Denison, you've got all of those neighbors in close proximity. You've got literally the best unmined asset, I would think, pound for pound in the world.
Easily.
And it's sitting there. It's profitable and desirable no matter what the market is.
I think it works at $12 uranium.
What's that?
I think it works at $12.
That's insane. And so like the crazy thing is with it is like, if it doesn't work now, if it's not a desirable thing, unless I'm not shitting on NexGen.
Yeah.
It's just the whatever.
But people, the buyers are not going to need uranium in 30 years. They're going to need it now. And if you have a mega project like NexGen, how long is that going to take to bring online? Those things take a long, long time.
2027.
2027? Is that what they're saying? And you think it's going to happen?
No, it's permitted. Yeah, it's starting. They have $300 million in the bank right now.
I don't.
No, NexGen's it's getting built. That's why it's starting to run the permitting process. That's why NexGen's running so much, because it's permitted, right? So it's a real thing. The other ones that are in the basin, like the fission and ISO, like think about ISO. ISO has 400,000 tons at 50% uranium.
Yeah,
uranium's $40 a pound. Imagine like that. That's like, I can't even quantify how much that rock. Like it's so ridiculous. Permitting issue there, but that's the big thing with NexGen. That's why it started to rip, because uranium was ripping, but also because it's going to get built now.
I just feel that things never go as smooth. Like Cigar Lake was supposed to be a big thing. That's never smooth. Like nothing, especially in that area, nothing ever goes as smoothly as they think it does. And they have the costs all budgeted out. You really think that it's going to come in at that cost, considering what's happening with?
Probably not.
Yeah. Like silver, like if silver popped tomorrow to like $100 an ounce, let's say, right? Are all those chicken shit projects that would sprout up out of Timbuktu, Mexico, and everywhere else? You'd have stuff from BC getting dusted off, like, oh, the silver project over here, like in Yukon and whatever. There'd be this piece of crap little thing. Like there would be so many things that would be like absolute zeros that would be out there in the market, and then everybody be frothing at the mouth buying. But like really, there's only so many big critical mass silver things.
But that's like the cyclical nature of commodities, right?
If
something spikes up, you're going to have an oversupply to bring it down.
But that's why, who'd you guys have on the show that talked about policy as the only real alpha? He
Lotan?
That was Lotan.
Yeah, that's right. Yeah, so I think that's where that alpha comes from, like long-term ideas. Uranium's I don't understand the uranium market at all. We had Phil on early in our podcast days, right? Which was great, and he kind of goes through it. But uranium is a hard one. I don't really get it. I just know that NexGen is the best asset in the world, and I like owning the best asset in the world. But to your point, like, it's a small unknown market. So all these other things, like, you probably have enough production in the Athabasca, but silver is another one. It's such a small market, right? Like, it's just not a big market. It's like $20 billion. It's just not a very big market. Whereas you go into the oil market, like this 7-year consolidation, like, you have a long-term thing. Like, it's not like so easy just to start things again. And that's, again, why I like good projects in I know, CG, you like them as well. I thought we all do. It's like critical metals that are hard to find, that have permitting advantages, base metals that are like copper has fundamentals for a long time, right? As much as I don't like necessarily all the lithium things, there are good things out there to own for long-term fundamentals that you can kind of be like, okay, so the price spikes to 60,000 a ton and now it's 20, but it's not going back down to 5 like when we all started.
Imagine gold. People had gold stockpiles. Well, fuck, maybe they do. Maybe I'm just gonna back myself into a corner right now with this, but imagine gold was like this to an extent where there was no demand for the metal, and so all of demand was kind of being sponged up by proxy accumulators, let's say, of gold, only to wait. Maybe that's what people do with gold. Maybe that's what I'm saying. Maybe my whole point is gonna close on itself here, but uranium just seems like there's this whole like gold has an infinite amount of demand. If I make an ounce of gold, if I make a bar of gold, I can sell it no matter what tomorrow. There's always going to be buyers, and those are real buyers, right? They want that. There's an insatiable appetite for gold. You're not uranium. Uranium, there's like a limited appetite for uranium, right? That's why like people like Japan had like stockpiles of years, and like there's funds now buying physical, and they're looking to or hedge these, and then there's like long-term, short-term contracts, all this complicated shit.
But
so
you can use it though. You're taking it out of the market at the same time as well. The people
for sure, it's getting used and consumed. Yeah, that's fair enough.
Versus like we talking to people, that's why they like the industrial metals, base metals as well, because there's a tangible value that you can attach to it. You're building roads or you're building infrastructure. You have to redo the United States grid. You know how much ballpark
you're consuming
copper or like you're going to consume, and so you know that we have a supply crunch coming if the world keeps on growing at a certain percentage, and this is how much we're going to need. And now, like it's almost like it's always going to be a risky trade, but not as risky as gold, where we don't know what's going to finally propel gold.
But uranium, let's say, like, what does China have? Like 100 reactors or 50 reactors or something like crazy. Like the number's always bigger, right? It used to be like 30 reactors, and it's like 50 reactors. Have they built a reactor yet?
Yeah, they're building reactors.
I know, but it has like hypothetically.
Yes, they
now there's 100 under
during
construction.
That super cycle, and there's always going to be like 200 in that kind of construction process. But they have been hammering out these reactors, and they are big buyers of uranium.
So they have hundreds of reactors right now operating in China. I'd like to know how many operating reactors are in China right now, because I've been hearing about an endless oversupply of production Chinese reactors literally since I got into this business. It's been like, oh, China's building 30 this year. Oh, fuck, really? Okay, well, do they even have, like, Canada has, like, I don't know, not that many reactors in like, I don't know how many.
I hope that small reactor thing that Gates has been working on, that the OpenAI guy just got into as well. That would be the coolest if you got like these mini reactors that started working.
Oh, then I'm going like heavy on uranium.
All in.
Like, yeah, then it's like
all in.
100%, man. 100%.
Yeah.
Right now,
AI will solve that.
Fukushima's fucking Japanese supply of stockpile that they built up for 50 years that they're never going to use, and they're just going to sell that back into the market.
So China has 55 reactors online, and they're building 21.
Building 21, but how many do they have planned in the pipeline?
I think CJ's totally right. It's in the hundreds.
Yeah, that number has always been in the
right,
hundreds.
Exactly. So 55, but it's always been hundreds or 30s or whatever. Like, it's always been big numbers.
Yeah.
55 for somebody who's been building, I don't know. It just seems like It seems like there's like 15 years before they actually need that uranium, which is a long time.
55 operating, 22 close to completion under full construction, and then between 70 and 150 more planned.
Like Canada announced its biggest one ever, which is awesome. Congratulations, Ontario specifically. Great. That's like the best news I read in forever.
Yeah.
But like that's going to be what, like 15 years from now? That big sucker comes online, actually needs uranium. Like it's going to take a long time, man.
So do you like copper?
Love copper.
Then how come you like copper and not uranium?
Because you don't need to build a 30-year building plant to consume the copper. Like you can go out there and
consume it right
away, instantly.
I think that there's a bigger global push towards electrification in general than there is towards nuclear.
And age,
right? That's why.
But don't they fall into the same kind of theme?
Not necessarily. You saw the UK already like pulled back their oil thing. Like you still can use natural gas to power electricity. You can use, I guess, solar and maybe.
Yeah.
but like you don't need nuclear necessarily. Like there's still other sources. You can still fund green energy with oil.
Yeah, and coal. Coal, you could build a coal plant tomorrow, like a thermal plant. It's like
Yeah. Well, speaking of copper, I ran into the other CJ at Beaver Creek, Charles at Silver Tiger, and they put together Mexican copper. And so that's another fun copper story that I don't think we've touched on.
No, yeah, we played that in want to say July. It was like a summer doldrums play. PI brokered it. It was a private deal. It's the Go Gold guys and the Silver Tiger guys.
The Halifax Mafia, they call them.
Is that who it is?
Yeah, because they're all out of Halifax, like a small.
Oh, really?
Guys, yeah.
Wow, I didn't even know
wait,
that.
those guys too?
No, not wait. I asked, not wait, dog, but like Go Gold. What you said, Silver Tiger. Like there's a small
there's a pocket out there in Halifax.
Okay. Putting together pretty decent deals. Halifax to Mexico kind of thing, right? That connection. Oh no, we lost Matt.
Yeah, they're all in the same area, really. Like the Go Gold, the Silver Tiger, and then this Mexican copper thing. And this Mexican copper thing is they have a historical hole 7 meters of 22%, and you can get there anytime. I mean, it's just operating in this area of Mexico can be a little challenging, but it's like 15-kilometer trend, porphyry potential, and multiple different kinds of things, and historical mining of like copper on surface by small families for a long time. So you can recover the copper. It's clearly high grade enough that you can get it. And it's a giant. And these guys are like, this is going to work. And it wasn't cheap. It was a 35 million pre-money, I think. And it was PI guys did a really good job. I think they raised 8, played in it. It was a good enough asset that even in the summer doldrums, you pay up. You're just like, yeah, I want to be part of this. It's great. It's kind of like another one is Juno, right? Like the guys up in the Ring of Fire right now. Looking for massive sulfides, nickel, copper, and PGEs and gold, I guess everything. They are raising like $100 million pre-money, and you play because it's just you get those two are very hard. You just don't see those deals all the time, and you're just like, I got to be part of this because the geology is so good, and the potential is like that's what you would care about, right? Like if you find another Voisey Bay in nickel, like what's that worth? It's Friedland sold his for $4.4 billion in 1996. So what's another version of that?
Yeah,
right. Like you're talking billions and billions of dollars, right? So
the locations of these copper projects matters quite a bit. I think the Mexican thing, one of the things, just going back to what we were talking about before with like the supply demand and like the macro kind of climate for these things, like one of the big things I think we take for granted, or at least we probably hear about it chirped by like many like the pundits and the talking heads out there, let's say, in different ways. But the way I've been thinking about it is, there's a certain base quality of life that we have grown accustomed to in the West. And that is spreading like a cancer. That is spreading exponentially fast. I mean, the middle class, style of life, that base quality of life, living, car, house, toys, cell phones, gadgetry. It's pretty hard to live to imagine a world in 20 years where every single developing country today doesn't at least have that. And to have that, there has to be a huge amount of copper, a huge amount of like metals to facilitate that. Like, it's a global world with the internet and everything. We're like, you can't literally be sitting in Mexico going, look at all these haves and we're have nots. We don't have this quality of life they have. I want those things.
Yeah. And where do you get the electricity to power all of that?
Well, I mean, there's.
Are we tying back to uranium here, Siege? Yeah, we are.
Trust me,
uranium.
On nuclear, I'm with you 100%. And when Mexico could fast track it, right? They're at least with it. They could probably fast track it, get something built in a hurry. But again, you know, in terms of copper and all that stuff, I mean, look at like a big Mexican copper project. Great place to have it because they need a lot of infrastructure.
Yeah, this is a cool project, and these guys know what they're doing down there, and it's big grades. And I think on copper though, I mean, it's funny tying it into another bulk tonnage, but if you look at, there was a release by IAMGOLD on Cote Lake, and Cote Lake was the asset that got bought by Greg Gibson, sold it to IAMGOLD 10 years ago, 600-700 million or whatever it was, and it was supposed to be this $1 billion capex. Remember, like the Detour and Cisco craze when you had the bulk tonnage craze, right? And everything was just like $500 million to $1 billion. That was just bulk tonnage. That's what the capex. It was somewhere in the middle there. And the recent release that they came out with said that it was going to be over $3 billion to build this bulk tonnage project in Ontario.
Rest in peace, IAMGOLD.
What's the IRR and something like that?
Rest in peace.
The recount?
No, they didn't. They didn't put it out. But
you're done.
$3 billion. It was a 0.8 gram deposit. I mean, there's lots of gold there, but it is a lot of dirt. And I think that just tying into like an investment thesis is like, you know, it costs a lot these days. CJ, you were just saying, like, what's the cost of these things?
What? I thought that was a joke when we were saying that on WhatsApp, that it was $3 billion.
No, $3 billion. No, for real.
Yeah, actually released, it was $3 billion.
So it's going to be over $3 billion. So like that.
Doing right now. Oh my God, dude.
Let's take a look.
It's crazy, man. So, but I think that like there's so many, it's interesting because like the themes of these last few months, like the porphyries, these low grade things that require a lot of dirt to be moved. You know, it's hard to find good assets. Like it's, you know, just looking at things, it's did it get smoked?
Wow. Let me just have a look. It didn't get smoked hard enough. There is a short opportunity on IAMGOLD, my friends.
It's so hard, man. Like it just costs a lot. It costs a lot to move dirt, right? So like you got to search for a little bit of grade out there. And that's the thing about copper though, right? It's like, and I know it's like the zinc argument. The, you know, Neil O'Brien, who's on my advisory, he talks about he was a zinc geologist for so long. When he was attacking, there was always this story of like zinc is going to explode. And there was another one I remember in 2010. Zinc's going to explode. There's not enough supply. You need zinc for whatever. I don't even know.
Hardening steel and whatever.
Yeah. Right. So like the world is growing and all this stuff. And then all of a sudden zinc goes up and then all of this secondary zinc, all of this zinc comes out. And it's like, yeah, we're good. And I think that at the end of the day, I do think that like we need a ton more copper. And we are short with what we have right now. And there have not been a lot of new great discoveries in copper. But at the same time, the amount of supply that could come online from Africa alone, like just in the Central Africa copper belt, just like people are like, okay, well, copper is $5. Let's bring this on. I think we underestimate that a little bit, kind of like peak oil, right? In the 70s, it's like, okay, well, we have no more oil. So the best oil things are great. The best copper things are great. I still think that bottom up approach is important with a good macro thesis. Cause like, you got to have a little bit of patience. Like, it's like, it takes time. Gold is it will go up as inflation goes up, right? It's like, you know, it's just, we're so short. We just have very short attention span.
I don't mean to hark back to like the conversation I had yesterday with Warren, but it's fitting again. Perfect. Like exactly in the pocket. His whole thing is just buy the best asset you can buy and let the market do what the market's going to do. Like, of course I want, you know, if I'm going to buy, like if I'm going to look for a copper asset, buy the best possible copper asset, period. And then just own that. And then hope that all of a sudden you get this big frothy, you know, everybody gets excited about copper, period. And then pull off that position. Like, don't try to play, like wait till copper explodes and then go out there and try to swim around and play in the coppers. I mean, what people say and what they're actually doing is two different things. First of all, I just want to make that clear. Just because he says it doesn't mean that he doesn't do the other part or whatever. But, you know, at the end of the day, it does kind of make sense. Like if you like uranium, buy the best possible uranium project. That's it. Like something, you know, absolutely. Okay. That's a winner. That could go. And then you don't care if you own it in a shitty, not so exciting uranium time or a very bullish one. Same goes with copper, etc. Easier said than done. But
then why
I mean, like copper, like the best ones.
I would say, then why even buy a developer or someone that's developing a project and run into the risk of permitting delays or environmental or anything? Just buy like a direct physical copper ETF or something like that if you think it's going to go up. Like why?
But I guess the torque,
risk,
the
right?
torque, that's why the permitting was such a big catalyst for NexGen. It's
but
to your point. It was in that rut.
In a company, don't you want torque to the underlying commodity? But I want discovery torque. Like, I think that's why a lot of people are in the game.
I want discovery torque too.
For sure.
I hear you loud and clear. But I think
again, like go find discoveries to find the best asset.
Yeah.
Right. Like go for ones that are going to be good in any market. I think that's where I hope our portfolio is going. Like we've spent the last year basically, not to knock on our previous portfolio, but when we were doing things before, it wasn't quite the same.
No, it's different mandate. Yeah, different mandate as well, right?
Yeah, so we have like 29. We spent the whole year basically creating 29 or 30 core positions, right? Mm-hmm. So we have, I think, 30 core positions, and that just was random. It's not like that properly diversified statistical thing that wasn't supposed to be 30. It just happens to be 30 right now. But and trying to place them in good quality assets, right? We think we have the best gold asset, right? Newfound, yep. We think one of the best gold assets, Southern Cross. Let's be in these best assets. They're going to be fine. But definitely, when you're looking, there was a benchmark question actually in the chat as well. I don't know how I got into this, but on like a time weighted basis, we're outperforming GDX and GDXJ. But like, does that even matter when you're sort of selling out of all these other things and putting it into these what we think is the highest quality things? Mm-hmm. So, that's really it's like a bullish. I don't know. It's kind of like the venture is what if you took uranium and oil maybe out of the venture, like all time lows maybe other than COVID. Like it's the worst I've seen it in 15 years for sure. The TSXV, it's terrible.
Do we have any talking points on that?
Yeah, we can talk about it. So the GDX, I mean, like if you look at the last, so the TSX, if you took like what is it right now? Let's use end of September, right? So it's down 5%. The GDX was down 15% since we're doing this since April 30th. So April 30th, kind of like I just think of that as like the real start of this crash, right? Mm-hmm. GDX is down 15%, GDXJ is down 16%. Like these are real big numbers. Like the GDX, like, and gold is what, 1926, 1930? Like it's not even.
Yeah, it's almost flat.
Hasn't even crashed.
Yeah, it's flat almost for that period.
So it's just an uncaring equity market right now, and the TSXV is down 5%, but that's being buoyed by these lithium and uranium. You know what I mean? Like that's still. So I don't have my numbers on attribution for that, but if you took copper, gold, like took base metals and precious metals out, it's really bad, right? But Siege, we have a great chart somewhere on you put it together on like these bull and bear runs in the venture, right? So we're all jumping into what's working right now. But if you own these really high quality assets now and you buy them, I don't know if I rush to own like a cajillion of them, but like own them now. It's like you're here at this bottom. It's just how long does it take? I guess the average, what was this? Like the average bear market we looked at is definitely longer than the bulls, but we're talking like a year, maybe two, and we're into it now, right? So we're into it a year or two. So,
but if you can weather a bear, like if you can weather the bear and be patient, these bull markets are extraordinary,
amazing.
Yeah.
We're doing pretty well though compared to the GDX and the GDXJ.
Yeah, I think we're down. So we're down again. I have the exact number now. Like this is not precise because
not in accordance with
it's not audited or in quarterlies. I think we're down with it's forward looking, but we're down about five points, and that includes like drops from April 30th. I'd say we're probably flat from the end of last year. We were up a couple $1 million. I only started recording time weighted by the end of April. And for those time weighted returns, you're dealing with kind of moving money out and moving money in, and like monthly compounding. So it's like, how would you do putting money in at the beginning? It's like it's how you would calculate it in a portfolio. Mm-hmm. So we're down about 5%. Would probably be a little bit up actually if you did it at the end of December to now. But from April 30th when I did it, that includes we've been selling out of these positions that are just really starved for cash, right? Like that's the reality of it. It's just a hard market to be in, and so those things that were worth 10 cents are worth 3 cents, right? And so you're trying to balance that out, and then unfortunately, things like sterling are cut in half, and Newfoundland's down $1, and we have a good position in that. And you have things that we really like that are down as well. And so luckily we have this cash and patience and the ability to do this, but we're doing pretty well. Like, I think that being able to rebalance a portfolio into 30 core names in the last 9 months and then basically be even is pretty good. Like, we've had, and the ones that we're down on are ones that we're really bullish on.
So we're basically like the fattest kid in The Biggest Loser, basically. Like, if it was like The Biggest Loser was the show, we're the fattest one. We didn't lose.
Yeah, we're winning the race this year so far. If you look at other things that are losing the race, that's right. So we're like, that's right. I get what you're saying.
Than everyone else. Yeah.
That's right. But then, like, a bull market gets everyone on a diet and turns them all into Usain Bolt, right? So it's like, we're going to be first in the Usain Bolt line and diet first, right? So, but yeah, like, it's pretty good.
Yeah. No, I mean, I'm really happy with the port. I'm really happy where it's been pared back and dwindled, and not dwindled, but pared back and sculpted into. Sculpted is the right word. A lot of the deals, really optimistic about those. Like I said, Borealis was cool. It's getting a lot of attention. I'm really excited for that. Yeah, I mean, that's Cristobal. People are excited about that. That's a couple of times now on different pods. I think it was Beaver Creek. I was with Peter McGaw and Michael from Vizsla Silver. And then it was asking them quickly on a whim, interesting deal. And San Cristobal came up on that unprovoked and is like, oh, you probably haven't heard of this one and you probably didn't play in it or you're not allowed. It's like, well, actually we did, but
then they drilled, I think that one of their holes, I was with CJ and I were just chatting about this. I think they drilled it was like 40 meters of 2,000 grams silver, like 3% copper, like 6% zinc, some like the most absurd results like I've ever seen. And it's an operating mine. It's like operating silver mine. It's like the 7th biggest silver mine. That's just it's Bolivia. It was a $50 million deal, right? It's Bolivia. It's sort of, but you had to play if you saw it. I think it was a siege. What was it? 70 million pre-money or something, like something.
Yeah. And the way that they structured the acquisition of the assets, basically taking the inventory and basically using the inventory they had, because Sumitomo just wanted feed and they used that to acquire it basically. So yeah. It
was cool.
Some cool.
They leveraged inventories to purchase.
Some good finance we were doing in the background to get.
But you got to let the J curve play out, right? Like, just think like venture capital, any industry you're playing, whether it's like a cancer cure or technology play, whatever it is, you got to let the J curve play out, right? So you got to invest, let the thing kind of trail down a little bit, and then it gets going, right? So we just started 9 months here. So public markets make things so weird because you're investing in startups that are public, right? Like, it's like usually you just get to a little bit of patience and let them do their work. But
yeah, I feel like that with Kirkland Lake Discoveries in a big way. I'm sure you do too with Sterling. But
yeah, it's like you're really excited. You're seeing tell us about Kirkland. Like, why are you guys so excited?
Oh, we're super excited because it's that J curve, right? Like the fact that we're public, right? So we closed this deal, raised all the dough, got to work. We had a lot of work in front of us. We had to resculpt the team. We had this project, and super exciting because what ended up happening was we had Agnico announced that they're going to put Upper Beaver into production. So Upper Beaver, just for the record, is about a couple kilometers off of our border. It's still about 2 kilometers off our border. And so about 4 or 5 kilometers away, we had basically evidence for a lot of the similar rocks as Upper Beaver.
And what is Upper Beaver? We have a tie into it because of our Pine Tree days. It was sold to Queenston to Kirkland.
It's some wonky, intrusive related copper gold system that exists. They're common more in the Chibougamau camp. There's a couple of other instances, but it's an intrusive related copper gold system. Kind of like a scarnoid type of situation. So you get these like a bunch of intrusive dikes punching up through the rocks, and you basically get like at the contact of them with the country rock, with the volcanic rocks, you get all these like contact zones that are relatively thick, and they're rich in copper and gold and magnetite and epidote and things like that. Some really weird looking rock, right? And that's Upper Beaver's 4.5 million ounces of that basically surrounding. So one of the cool things with Upper Beaver is that you have this like big mag anomaly. So you have this big intrusive, let's say circular intrusive, but the inside of it is a mag low. Like, so the inside of it's a low and the outside of it's a high. And one of the interesting things with it is that the mineralization happens to have a ton of magnetite in it. Like, so that's why it's so high relative to the like the outside is so high relative to the inside. So on a mag survey, reduced to the pole and treated properly, it basically looks like a donut. Right now, if you look at every other kind of mag anomaly in the area, you don't see that donut come back. Like, there's a couple of other spots where you get that kind of donut effect, but it's not, and Agnico has some of them in close proximity to the thing. So we had Goldspot do a high res MPAS survey with LiDAR over the area, and I really swear by it. I think it's one of the best surveys in the business. And everybody should, even though we've, it's now belongs to ALS Chemex, use that system. It's literally very good.
It is very good.
Yeah, it's like super good. And anyway, so they did that. We did really, really high res, and we had testimonials about an anomaly that was along our big structural corridor that we really liked. So there's like a Malvern Lake Mist Lake fault, and there's this big structure up there that we know is just like the main break. It goes right through the crust into the guts of the bowels of the earth, right? So there used to be this big kind of like granitoid feature and some old testimonials about a guy going up there, finding submagnetite, finding some stuff. So that was all swimming around, but it was kind of a tough area to get to on in that part of the project. So once we did this survey with Spot, it jumped out. And it was like a perfect twin of what you see at Upper Beaver. It was like the low in the middle and then the high. So we sent a guy there. And so we sent our team out there. We went and kicked some rocks around, and we're finding the epidote, the magnetite, there's a gold soil anomaly and a copper anomaly that lines up with it. So, I mean, all the ingredients are there. So we think we may have another Upper Beaver lookalike type thing. So we're real jammed up about that. We don't have assays back yet on a lot of the grab samples, the preliminary work that we've done, but we've really blitzed it hard to get as many numbers as we can get. Tough part about there is access. And so there's a couple of little lakes that line up with the highway. So like once the winter comes, we can just drive out and get a drill out to the spot for a lot less money. So we're waiting until wintertime to drill it. But for now, it'll be really exciting because we'll have all the science, the mineralogy, to be able to tell that story. So we're really excited about that coming up this fall. But again, we're still waiting on assays, like yourself with Adeline. And we're in that J curve kind of thing where no one knows what the hell we're up to. We're not putting out a ton of news, but we did talk about it briefly in our last release. But like I say, expect a lot more to come from that. It's really, really, really exciting. And I'm not saying it's going to be another Upper Beaver. It's very similar size and everything, but is it going to be another 4.5 million ounces gold equivalent? I don't know. Is it going to be 2? Is it going to be 1? Is it going to be 0? Probably not 0.
That's cool. And that's a huge, how much of what's it, the parallel break you guys had? It's like 60 kilometers. What, like you have so much strike of
55 kilometers. Yeah.
Yeah.
So there's a lot,
it's a big system.
And there's a lot of recurrences like this along that trend as well. So there's definitely lots that's coming to surface. And I think the prospecting has been a lot more exciting than maybe it was intended to be on that project.
Unfortunately, markets never care. We're going to come up with some cool prospecting too. I feel you here. It's like, that's how you find deposits. It's like, we just want, but I understand because you got to put money into things. And obviously there's a cost to investing in things that aren't going up. Right? Like I get it.
I mean, we don't know. To me, it's the most exciting stuff. And, to talk about and to find and to get enthusiastic about. But like you said, I mean, the market's not that friendly. They'll have to wait and see us hit them over the head with however many drills.
I don't want to force the comparison, but I feel like that's where EarthLabs is as well, because we're essentially starting a new business and
it's a Jager
planting the seeds right now. And I can empathize with a lot of our shareholders because we're investors in the space as well, but there's a lot of stuff that we have to do in the background that may not necessarily add immediate value, but it's a necessary step to take to get to where we want to get to. And
100%.
Like to say that, it's hard markets, but I tell everyone in our office that I haven't felt this excited since the beginning of all of our startups in 2015, 16, where, you know, you have this idea and you really know that you can take it to the next level and you're putting everything into it. Sometimes it feels like you're running on a treadmill, but you know, it's the excitement that keeps on giving you energy to keep on going. And I know that's part of being an entrepreneur, that a lot of people can say stuff, but, you know, head down and believe in the vision and you just keep on going. And part of the fuel is proving everyone wrong, because I know, like, we've done it.
Like, done it every time. It's the same. Yeah. Every time it's the same thing. It doesn't matter what it is. Mm-hmm. And, you know, as long as we're sticking to our knitting, doing exactly what we said we're going to do, doing, like, you know, working on making sure that we're getting the best investment opportunities possible, rebalancing the port the way we said we're going to do, execute on CEO.CA. Josh is totally meeting all of his timeline expectations and on CEO.CA rollout and 2.0.
We're getting there.
He's nailed it. No, we're getting there, right? Like everything, like we're under budget.
Oh yeah,
we're a little over time, but you know, like everything's working out. So yeah, you know, like look, nothing in this world's linear. No growth is linear. No business is built in like a perfect linear fashion. No stock goes up in a linear fashion constantly, you know, without corrections along the way. So, I mean, it's almost like one of those, you got to turn everybody off and just stick to what we know, stick to what we're doing. And it'll all play out well for us and our shareholders.
I like talking about a portfolio. Yeah. I like it. It's great. It's like we have so many cool projects in our portfolio. So it's been a fun year, that's for sure. Like big systems, big things, right? That, you know, if they work, they're the next the Philos, the Newfounds, the Southern Crosses, right? Like those that's the scale that we're going after. And I think that, you know, just the stuff that even you guys are doing on the tech side, like big scale, you're talking about, like we're trying to align ourselves with torque for the market. Like again, it's being patient in a bear market because we are able to be patient because we have capital to invest where we see the best torque.
Yeah, we want a torquey portfolio, and then we want cash flow positive businesses. We have a blend. We want to be selling shovels effectively, and we want to be investing. So with CEO.CA, DigiGeo, we want to be selling shovels, making money. And at the end of the day, you know, with the investment portfolio, we want to maximize torque and you know, have a nice balanced and stable kind of.
Yeah, it just might take a little longer here in Canada. You know, we've been pretty beat down the last 10 years, right? You had like there was the weed run and then crash. How many people lost like their shirts on weed? Then there was crypto. Everyone lost their shirts on crypto. Then there was the trading bros and GameStop, and, you know, people jumped into psychedelics, and then people jumped into
the next one with lithium, where
the silver bulls, right? Like everyone's just gotten shit kicked over and over. So
I think if you're up on lithium, you should sell lithium.
Like if you're listening to this and you're like a dedicated, sell your stuff.
Yeah, if you're up.
Like if you're up a lot, sell.
Unless you own positions we own, then don't sell those. Own those still.
Yeah, this is not financial advice. This is just friendly advice. It's not financial. I don't know. Like we're not certified to be giving anybody investing advice. But at the end of the day, you know, we don't know what we're talking about. But you should probably cash in some of your toppy stock.
I was talking to
and buy copper.
Yeah. Take off your profits at least. Just take off like your you know what I mean? Take
during the cannabis
ride
boom.
Your profits.
There's a New York Times podcast on this guy, the Doge Father. You guys ever hear this guy? Doge Father is like in California, comes from nothing, had like $12 million, which for him went from literally zero, right, of Dogecoin. I think that he had 30 million or something, and like he just would not sell. He bought a house, like a small house, and that was it. And just wouldn't sell it, and it's dropped. I don't know how.
At least he bought a house.
I think he bought a house. That was about it. But it's interesting. We get in such a, you know, we just have such a herd mentality when we're dealing with the market, right? So it's like you go where things are up already, and that can work, right? Like if you time it right, it can work really great, right? Like momentum trading definitely is a thing. So, but man, I like long-term horizons. I'm a terrible trader, so I like longer-term horizons where, you know, I really believe in the thesis, and I think that we're just as a company, that's what we're doing.
Yep. I watched one little disaster story from Beaver Creek I wanted to share. Dude, I met with St. Barbara Mining. Have you seen
St. Barbara?
Have you seen what happened to that company? So those are the guys that bought Atlantic Gold for like $1 billion. I thought of this earlier when we were talking about IAMGOLD, and I was going to say it then, but I don't know if the conversation went off. But I think it's still worth mentioning. Holy shit, man! They're like 97 million market cap from like billions. They lost it all. Like the Atlantic Gold stuff blew up hard. Like they had permitting problems. Like their whole board's turned over now. Management's new management. What's the plan? They sold their core asset out of Western Australia. They had they sold it for like $700 million, dividended like $300 million to shareholders, angry shareholders that were like calling for their heads. And then now they've got to put up like a big environmental bond. So they're sitting with like, I don't know, I want to say 60 million in cash, 100 million or something in the bond, and a valuation of 96 million, a piece of crap in Papua New Guinea that they want to sell, a piece of crap in Atlantic Canada that they want to sell, and nothing left in Australia. They blew up hard. IAMGOLD is still what? Like IAMGOLD's still $1 billion.
Still, Bill.
That stuff again hurt. Everyone was pissed. Were they all pissed when they sold? Was that the thing? Like shareholders were angry because they sold initially in Australia?
I think
dude, I don't know. I think that's a management team that had no concept of putting their company first. I think that they basically capitulated to disgruntled shareholders, sold a core asset, dividended out to core shareholders the proceeds of said asset, and then under massive pressure, and then those exact same shareholders just dumped their stock. So they got their dividend, pounded the stock out, pounded them into oblivion. The whole thing got, like, the board's new now, the management's new now, like the whole thing's a disaster. And there's nothing left. It's like, it's just a mess.
Ouch.
What a crazy. I was like, when you're ignorant to a deal, but you know what it's called, but you don't know anything about it.
They gave you this spiel in Beaver Creek.
Yeah, no. I was like, oh, St. Barbara. Interesting. Those are the guys that bought Atlantic Gold. Yeah. I knew they were like a mid-cap,
was
sort
it
of like
was
large
it in
cap.
a meeting or by the fire pit? Because that was...
No, it was a meeting.
Oh, really?
It was a meeting.
Yeah.
And I'm like sitting there, I'm going.
So were they like pitching you? Like, you should.
Yeah. They're like, oh, maybe we have. I was like, oh my God. I'm like, God bless you, boys. Like,
yeah.
Good luck and Godspeed to you.
Why are you here right now?
Holy shit. What a mess. But it just goes to show you, right? Like one bad acquisition, one bad asset sometimes.
Yep.
Holy shit. IAMGOLD has already obviously learned the lesson. But if there's still $1 billion in change and that thing's going to cost $3 billion, there's another lesson that's going to be learned, which is...
That's a tough one. Yeah. You called that actually. I think it was like 7-8 months ago we were all chatting and you were like, I don't think people understand the cost inflation of building things that's about to come, where it just changes the game again, which fundamentally is good for metals, right? Like if there's this huge cost inflation in building things, then obviously you need higher metals prices to make things profitable to fund them so that they go forward. So inevitably it's not a bad thing. But it's playing out. Like these things are very expensive.
If you look at the cost overrun, $2,000 gold looks like $1,000 gold.
Which is why CJ had that great chart of like the gold bugs index versus gold, and the gold bugs index since the drop in the recession and financial crisis is like the same, and gold is up 110%, but the index is the exact same. It hasn't moved in 12 years, and gold has doubled for that just exactly that reason.
Well, yeah, I mean, like everyone knows this on their own. Go fill up your gas tank. It's twice as much as it was before. You go get a contract, get an electrician to put a sub panel in your, garage, like whatever you want to do. Anything you're paying, any services, anything you're doing, go to a restaurant, your favorite restaurant, it's double the price. Everything's double. Everything is like materials are double.
Yeah, that the concession to that is it does make you're right. Like, what? Well, is it a good idea to invest in gold companies? That index hasn't moved in 12 years, but I still think that discovery and high quality assets, that's what differentiates it, right? That's why I like exploration.
Okay, well, boys, this has been an hour and 17. I don't know if that's an actual hour and 17, but that's what's showing here. Anything else we want to leave the audience with?
No, I think in terms of talking, we took a small hiatus, but we're back.
We're back. We got some good guests lined up for this fall. It was too bad. We were getting like the inbounds were crazy to come on this thing.
We have a lot of episodes dropping soon, though.
And they're still pretty crazy. Yeah. So we know we got episodes coming
got
out.
A busy fall schedule ahead of us.
And now that we have Matt's infrastructure set up in Vancouver,
this is awesome. I miss being in person. Yeah. I have a baby due on Thursday, so that's fun. Maybe I'll have like a little child.
But this worked though. Actually, I was afraid of like stepping over the conversations, like stepping on each other's toes too much with the whole Zooming. It's pretty good.
You should get a background like ours, so it looks like you're in the room with us. We just don't want to sit next to you.
There's a printer.
Yeah. you need the,
oh yeah, you just need like this.
Yeah, the wood paneling.
This paneling background.
All right, we'll send it over. Let's go. Put it up. We'll throw it up there. Took me like 3 hours to figure out how to make this mic work.
Sure.
Yeah. That'd be fun, eh? Okay.
It's good to be chatting again.
Okay. Thanks, Matt.
All right, guys.
Later.
All right, guys.
Thanks, guys.
Bye-bye.
All right, bye.